All right, welcome everyone. Let's take a deep dive into investment strategies.
Investment strategies, yeah.
You're out there, you want to make some smart moves financially.
Right.
We found some really interesting research and, well, honestly, it might just kind of flip your whole view of investing.
Okay.
We're going to be looking at some stuff from Pasted Text.
Right?
And some of the stuff we found was, well, surprising, to say the least.
Surprising, yeah. Well, you know what we hear all the time is that you got to have these really complicated strategies and insider knowledge to succeed with investing.
Yeah.
And that's not always true. Today, we're going to challenge that idea.
So are we, like, debunking some investing myths here?
Kinda, yeah.
Okay, where do we even begin?
Well, you hear about these professional investors, right?
Yeah.
And they succeed because they've got the secret sauce, right? Like, they're just brilliant, or they have more information than us, years of experience. But what if it's much simpler than we think?
Wait, hold on. Are you saying that all those fancy, like, financial models and algorithms are just for show? There's going to be more to it.
Well, let's look at some research.
Okay.
There's this paper from AQR Capital.
Okay.
It's called Evidence on Trend Following Investing Over the Long Run.
Okay.
And they analyzed a ton of data, 137 years worth.
Oh, wow.
67 different asset classes and all kinds of global markets.
So they've basically seen it all.
Right. Yeah, pretty comprehensive.
Yeah, 137 years. That's a lot.
Yeah. So here's the thing. The strategy they tested was really simple.
Okay.
You buy if the market went up the previous month, and you sell if it went down.
Okay.
And get this, over the long term, this made an average return of 11% per year.
Whoa.
And even after costs, like fees and stuff.
So wait, just by looking at, like, last month's performance, you can make 11%.
On average, yeah.
I'm intrigued, but I'm a little skeptical. Like, how is that even possible?
Well, it's something called trend following.
Okay.
Basically, you use market momentum.
Okay.
So when you see like a stock or whatever, a commodity starts going up, chances are it'll keep rising. And same thing the other way. It's trending down, probably keep going down.
So you're, like, riding the wave?
Yeah, kind of like that.
You catch the momentum and stay with it as long as you can.
That's a great analogy.
I like that.
And trend following, it works because it's diversified.
Okay.
You're not putting all your eggs in one basket. You're investing in lots of different stuff.
Right. Different assets, different markets.
Exactly. You ride the waves wherever they happen.
Okay, this sounds amazing.
Yeah.
But if it's so simple and it works so well,
Right.
why isn't everyone doing this? There's got to be a catch.
Well, there are some limitations.
Okay.
Especially for like regular people, individual investors.
Yeah, yeah.
So one thing is you got to invest in all sorts of stuff all over the world.
Right. Stocks, bonds, everything.
Yeah, all that globally.
Yeah.
That's hard to manage for most people.
Right. It's not like I can call my broker and be like, hey, buy me some Brazilian coffee futures or something.
Right, exactly.
Okay, what else? What other hurdles are there?
Another big one is short selling.
Oh, yeah.
That's betting that something's going to go down in price.
Yeah.
A lot of times individual investors can't even do that, even if they see a downward trend.
I see. So it's not as easy as it sounds.
Right.
So is this one of those things that's only for, like, the Wall Street bigwigs?
Not necessarily.
Okay.
You can actually use these ideas even if you don't have millions of dollars.
Okay, but before we get into that,
Yeah.
I've always wondered about those funds run by, like, the super experts, the ones that are always beating the market. Is that the secret? Just give your money to them?
Well, there are some really successful funds out there.
Yeah, like, I don't know, Ray Dalio.
Yeah. Bridgewater.
Yeah, Bridgewater, they always seem to be doing well.
Yeah, they've got really impressive returns.
Yeah.
Consistently making 11 to 15% each year.
Wow. And I heard they did great even in 2008 when everything crashed.
Yeah, they weathered that storm really well.
So is that it? Just hand over the cash and relax?
Well, there's a big but.
Okay.
These funds, they're not for everyone.
Okay.
They're really hard to get into.
Oh, yeah.
Like Bridgewater, their minimum investment is $5 billion.
$5 billion?
Yeah.
Okay, I guess that's why I don't see that option on my, online broker account.
Right, exactly.
Okay, wow.
They mostly work with big institutions.
So the rest of us are kind of left out.
Yeah, but here's the thing. Even though we can't invest with them directly, we can still learn from what they do.
Okay, so if we can't copy them exactly, how can we use this knowledge to help us?
That's a great question.
Yeah.
I'm glad you asked.
All right, tell me more.
Well, it's about taking those core principles of trend following
Okay.
and adapting them to your own situation.
Okay.
So we might not be able to invest in 50 different things all over the world,
Right.
but we can still diversify.
Right, within the options that we do have.
Exactly, like making your own little version of trend following.
I like that. Okay.
We can't buy Brazilian coffee futures probably,
Right, right.
but we can spread our investments around different types of assets.
So not putting all our eggs in one basket,
Exactly.
even within our own portfolio.
Right, like maybe different sectors, different industries.
Maybe some international index funds if we can get those.
Yeah, exactly.
Okay.
And remember we talked about discipline.
Yeah. Yeah, like not just like emotionally reacting to every market swing.
Right, exactly.
Having some kind of like guidelines.
Yeah, set some rules for yourself.
Okay.
It doesn't have to be fancy algorithms or anything.
Okay.
Maybe look at percentage changes in the market
Right.
or some indicators to see when things might be shifting.
So basically taking the emotion out of investing as much as we can.
Exactly. You got to be rational.
Yeah.
And that brings us back to what we were saying about self-awareness.
Mm-hmm.
It's not just about knowing what to do. It's knowing yourself.
Yeah, like knowing your strengths and weaknesses
Exactly.
as an investor.
Right. We're not going to have the same resources as a hedge fund.
Yeah.
And that's okay.
We got to play the hand we're dealt.
Exactly. Focus on what you can control.
Right.
Like how you react to the market going up and
Yeah,
down.
because it's going to go up and down.
Yeah, you can control your research process.
Mm-hmm.
Learn about how things work.
Knowledge is power, right?
Exactly. The more you know,
Yeah.
the less you're going to be scared or get caught up in the hype.
Right. You can make better decisions that way.
Yeah, informed choices, right? About what you invest in
Yeah.
based on your goals, your risk tolerance.
So it's not about becoming the next Warren Buffett. It's
Yeah.
about being the best investor you can be.
Exactly, with what you have.
With our own limitations.
I like that.
Be the best version of yourself.
Yeah, yeah.
As an investor, I love that.
It's a journey. It's not like a destination.
Right.
And even those really smart finance people,
Yeah.
they have limitations too.
Yeah. That's true.
Sometimes the simple approach is better.
Keep it simple.
Yeah, as long as you're consistent.
Makes sense. And, speaking of limitations,
Yeah.
I remember Paste and Text talked about those top performing funds.
Right.
Like how hard it is to actually get into them.
Yep.
Like a reality check.
Yeah.
These funds seem amazing, but most of us can't even invest in them.
Yeah, and there are reasons for that.
Okay.
Like these fund managers, the ones who consistently beat the market,
Yeah.
they're not that common.
Right.
And once they get a good reputation,
They're in high demand.
yeah, everyone wants to give them money.
Yeah.
So they have to choose, right?
Okay.
And it makes sense for them to go with the big institutions.
Right. The ones with the big money.
Yeah. It's just more efficient for them to manage those huge sums.
So it's not that they're being snobby or anything.
Right.
It's just like supply and demand.
Yeah. They got to do what works for them.
Yeah. Makes sense.
And that's a good lesson for us, regular investors. We're playing a different game,
Yeah.
trying to do exactly what they do.
Right.
Might not work, and it might not even be a good idea.
Like trying to play in the NBA when you're still learning how to dribble.
Yeah, exactly.
Okay, so we got to find the right level for us.
Right.
Understand our own game.
Yeah. Master the fundamentals.
And that's what leads to success in the long run.
Exactly. That's where things get really interesting.
All right, I'm all in.
Okay, good.
So what are some tangible things our listeners can do
Yeah.
to up their investment game?
I'm glad you asked.
Okay, so we've learned about trend following and how it's not just this like secret Wall Street thing.
Right.
But the question is, how do we actually use this?
Yeah. How do we apply it?
If we're just regular investors,
Right.
where do we start?
Well, Pasted Text had some interesting thoughts on this.
Okay.
They said we got to embrace simplicity,
Okay.
recognize our limitations,
Mm-hmm.
and really focus on the fundamentals.
It's almost like counterintuitive, right? In a world where everyone's looking for the complex strategies,
Right.
the secret formulas,
Yeah.
you're saying we should just go back to basics.
Kind of. Yeah.
Okay, so what does that even look like?
Well, for starters,
Yeah.
you got to understand the different asset classes.
Okay, so like stocks, bonds, real estate.
Yeah. All that. Commodities.
Okay.
You need to know how they work,
Yeah.
how risky they are, how they fit into a portfolio.
So it's not just about picking individual stocks.
Yeah.
It's about building a portfolio that can handle anything.
Exactly. Like a balanced meal.
Yeah, a balanced meal for your investments.
I'd like that.
Yeah, you want different food groups.
Okay.
Diversification is key.
Mm-hmm.
And then once you've got that foundation,
Yeah.
you got to figure out how to manage risk.
Okay. So
What are your goals?
yeah.
How much risk can you handle? And then
Right.
pick investments that match those.
And that's where that self-awareness comes in, right?
Exactly.
Knowing yourself as an investor,
Yeah.
how you react to things, knowing your strengths, weaknesses, all that.
Yeah, because the market can be unpredictable.
Absolutely.
We've all been tempted to like buy into the hype.
Right. Or panic and sell everything.
Yeah, emotions can take over.
Especially when it's your money.
Yeah, exactly.
That's why it's so important to have a plan
Okay.
and stick to it Have some strategies to deal with those emotions.
Like maybe having like a financial advisor you can talk to.
Yeah, voice of reason.
Yeah.
Or just remind yourself of your long-term goals.
Right, when things get crazy.
Yeah, exactly. You got to stay focused.
So we're talking about discipline and patience.
Yeah.
Not things you always hear about with investing.
You're right. It's not always exciting.
But that's what works in the long run.
Exactly. Slow and steady wins the race.
So it seems like the big takeaway here
Yeah.
is that investing doesn't have to be this like
Right.
mysterious, complicated thing that only the super rich can figure out.
Not at all.
It's about keeping it simple.
Yeah, knowing what you're good at.
Focusing on the basics.
Yeah, mastering those fundamentals.
Managing risk,
Right.
having a plan, and sticking to it.
Exactly. That's how you become a successful investor.
And that's something anyone can do,
Absolutely.
no matter how much money you have.
You got this.
Yeah. So anyone listening out there,
Yeah.
remember, investing success is not just for the elite.
Anyone can do it.
It's about putting in the work, learning, and growing,
Right.
having a clear head and a long-term vision.
I think that's a great message to end on.
I agree. Thanks for joining us on this deep dive, everyone.
Yeah, thanks for listening.
We hope this helps you on your own investing journey.
Keep learning.
And until next time,
Keep diving deep.
yeah, keep diving deep.